You know, you may not realize this, but we have in fact seen this before. No, it wasn't headed into a bear market cycle. I've seen a lot of comments and posts about that, and that's what got me digging deeper down the rabbit hole. The last time we actually saw this series of events take place, it actually led us to one of the largest market expansions we have ever seen. Are we on the verge of seeing that again? I want to talk about this with you guys, talk about timelines here as well, and how this relates to ADA. So if you guys are new or haven't already, show your support for the channel down below. But let's dive into this, because this was the post that got me again going down the rabbit hole. This is a post by Crypto Rover, and what he actually pointed out was Bitcoin's bearish monthly crossover. This is actually on the MACD. And here's what I will say is, guys, I'm not blissfully unaware of what's going on in the crypto market, right? I see the charts, I can see all the technicals. I've seen that we have some things that are consistent with the prior ends of bull markets, right? This MACD crossover, for example, crossing below and closing weekly candles below our 50-week moving average. Yes, those things have happened in history, but there isn't always a correlation or a causation between the two of these. One isn't mutually exclusive to the other, is what I will say here. In fact, right now, what we're seeing from a series of events was actually consistent with what we saw in early 2020. In fact, just even looking at this chart alone, yes, we can identify those two obviously very, very large crosses on the MACD, because we obviously had euphoria, we had big rallies in the crypto market. But where we also saw this taking place on a smaller scale, you'd really have to zoom in, is back here in early 2020. When we had the COVID crash. And why I'm pointing this out is I want you guys to see if this sounds familiar. So in 2019, the Fed officially ended quantitative tightening. This was, I believe, in August of 2020. Not a whole lot going on between 2019 and early 2020. And then we had the COVID crash. All right. Obviously, it sucked. Anybody that's been here that long knows what it was like. It was brutal, but it obviously led to some pretty exciting things, because the Fed began quantitative easing. The Fed cut rates. We actually at that time started to see a PMI expansion as well. And I'll get to this last thing here in just a moment, right? But what we're might be actually beginning is with this here, and we're starting to move through some of these things. So the Fed has started cutting rates, not in a crazy aggressive way yet, but that may be coming down the pipeline in just a moment, which I'll talk about here in just a moment. But we are seeing this exact same thing play out here in 2025 into 2026. The Fed has now officially ended quantitative tightening. We might be amidst a crash, right? Where we have obviously seen the market moving down in terms of price since basically October. We had the largest liquidation event in crypto history. And we haven't really seen that yet in the stock markets, right? There hasn't been this, major stock market crash. There hasn't been a recession or anything like that. And yeah, I guess some people would argue that we're in a recession now and have been for a while, and that's completely possible, right? But the Fed isn't really in a hurry to begin, aggressive rate cuts or begin quantitative easing quite yet. But that might not be on the distant horizon. But why I'm looking at this is we have not begun a PMI expansion yet, and we have already started seeing liquidity expand in the crypto market. So this is actually very consistent right now with what we were seeing back here in 2020. In fact, just take a look here, right? Here's our PMI. The COVID crash led right to a PMI expansion, major blow off top in the market, major altcoin market expansion. That's what we haven't seen yet, right? So we're kind of in the process, if you will, in the process of doing what we did in 2020. Now, as far as timeline goes, this is the way that things could play out. If we do get basically an ugly close to the year, ugly start to 2026, that is where you could see the Fed aggressively cut rates, aggressively expand the balance sheet. And then you could see an aggressive PMI expansion. You could watch basically us just explode out of these ranges that we're kind of in now. I'm not saying this is happening today, tomorrow, the next day, right? It's going to probably be a little bit unexpected, especially with all these people kind of caught on the sidelines right now. But that is that kind of V-shaped recovery like we've talked about, where all these people think that the 4-year cycle is intact, and then the market just decides to leave them behind. Now, the second way this could take place is if we have a longer, more gradual rollout in terms of rate cuts, in terms of QE really truly beginning, in terms of PMI expansion. And this is something like I talked about, where it might be not as deep and a little bit shorter of a bear market. This, and what that maybe means is by the middle of 2026, you could see the market really accelerating, where you're starting to see adoption again. And one thing I'll point to here is, guys, during this time, what you have to remember is, yeah, retail might be cowering in fear. Some people may be taking profits and losing their conviction, but you're still seeing these big, large entities on the sidelines, strategy, institutional players, enterprises in general, I guess, expanding positions, right? So even though there's instability on the retail side, there's stability on the enterprise, institution, and government side. So it's kind of a balancing act, at least as of right now. But what this could in fact be leading us to is the largest expansion we've ever seen. And I don't think it's going to take place on the timelines that people are expanding. And what I will say is, maybe I'm wrong. Maybe we get a normal bear market cycle. But again, we're seeing not the consistencies we've seen from cycle to cycle. In fact, just take a look at stablecoins. And when we've entered bear market cycles, we've watched stablecoin contraction, stablecoin contraction. We're not seeing stablecoin contraction. We're watching it expand. All right. So the point I'm trying to make is, we have seen these things before. The last time we saw them was in 2020, right before the market just went on a massive explosion. And I guess I didn't really look at USDT dominance at the time. I guess it really doesn't matter because it wasn't as large back then. But yeah, I mean, this isn't normally what you would see entering a bear market. And again, that's just kind of the hill that I'm on right now, and we'll see if things change. But I just wanted to share with you guys. I think it's wild how consistent this is with what actually happened back in 2020, right before things got wild. And we'll see if this all plays out the same way. We might not know, again, like I talked about, until maybe February or so. And again, this isn't me kicking the can down the road. This is just the state of where everything's at. We'll see how the news carries us. We'll see how these new ETFs launching carry us. We'll see how rate cuts carry us. But I appreciate you guys. I hope you enjoyed the video. Let me know your thoughts below. But have a great day. Catch you guys in the next one. Take care.